Good afternoon, friends, and a very warm welcome for joining this webinar at such a short notice. Friends, the topic for today's presentation is digital services, a global perspective from the Egypt VAT and from an Indian GST perspective. Friends, as we all know that digital transactions are gaining popularity every now and then, especially after the COVID. The changes in the business model has led to acceleration of the use of digital transaction. Friends, a report from World Economic Forum suggests that over a next decade or so, 70% of the new economic development is going to happen through digitally platforms. And friends, this is evident from the fact if you look at today's world's largest taxi firm, which is Uber, owns no cars. World's most popular media company, Facebook, creates no content. And the world's most valuable retailer, Alibaba, carries no stock and no big deal. And not only the importance of digital economy is growing, at the same time, the challenges for taxing these digital economy is equally growing and and for the obvious reasons like there is a physical absence of the suppliers in the taxing jurisdictions. Also we follow the traditional tax rules which are designed for brick and mortar kind of an economy which does not fit in to this new emerging technology. Also there has been growing obligations to comply with the international commitments for tax treaties and agreements, and therefore the economies as well as the tax jurisdictions all across the globe are evolving and bringing in new rules to bring taxability to these digital transactions. So friends, the focus for today's webinar is going to be Egypt VAT, especially the taxability of cross border digital services in Egypt. In order to discuss that, we have with us Mr. Khaled and Ms. Sara, who are from the Revenue Department of Egypt, who are going to talk about the nitty-gritties of cross-border taxation for digital services. Friends, as a background, Egypt introduced VAT system in the year 2016. And since then, there has been a continuous development which is happening over the years. Especially the cross-border digital services were brought under the TaxNet last year only in June 2023. And since then, there has been a requirement for non-resident suppliers of digital services to take registration under the Egypt VAT laws and do the periodical compliances. In India, we have similar provisions for taxation of digital services, which are known in the most popularly named as OIDR DAR services, which are online information database access and retrieval services. So, with this background, friends, let's begin with our presentation. The agenda for the today's presentation is first we are going to talk about the overview of indirect tax landscape. Then we'll be talking about the digital services, its overview and the coverage. Then we'll talk about taxability of cross-border digital services. Then we are going to talk about how to determine the place of supply for such services and what is the rate of tax that is going to apply. And then we are going to talk about the registration and the compliance requirements and the penal consequences for the non-compliances. It will be followed by a Q&A session. And whatever question and answer that you may have concerning Egypt VAT on digital services, please feel free to ask from Mr. Khalid and Ms. Sara. With this background, I'll invite Mr. Khalid to start the presentation. Over to you, Mr. Khalid.
Good morning, Mr. Kishore. Good morning, everyone. In this slide, we are talking about overview of indirect taxation landscape in Egypt. Actually, Egypt transferred from sales tax to VAT as Mr. Kishore just mentioned, in 2016. And from this point, we are talking about the traditional trade and digital trade, digital transaction, locally and cross-border. So we are talking now about 6.6 main points in VAT in Egypt. First, levy or burden of and obligation of the VAT. We have first standard goods and services rate, and we have table goods and services table. tax without VAT or table tax only. We have both. Table tax looks like excise tax. So it's a special rate, a special measurement of tax, not in percentage, sometime in per ton, per kilo, per liter. So table goods and services is a special case of applying VAT. Third point, exempted goods and services. We have 57 goods and services exempted for VAT. Normally, it's fresh foods, milk, strategic goods, strategic services, education, medicine, and four points. It's imported goods. Imported goods in Egypt actually applied in custom port in Egyptian port. The custom authority have to estimate the custom tax, and after this, they are add the VAT. So for importing goods, there is no problem. But the problem comes from imported service because the services has no physical substance. So we are applying now simplified VAT registration for this point. And imported services, including two type of transaction. First type is B2C transaction between the business and end customer, and the other one is B2B, business to business. In this case, the burden of obligation on applying VAT on the local customer, local business. Of course, under reverse charge mechanism, and reverse charge mechanism, I think it's internationally basic principle, which means a local business have to apply the VAT on his imported services. And the treatment we will talk about later in this presentation. Second, the rates. In Egypt, we have a lot of rates for VAT. Sometimes it's 0% for exporting goods and services. 5%, it's a special rate, the reduced rate of the 14%, the general price and the standard price. The standard rate in Egypt is 14%. 5% is a reduction rate, especially for some kind of services and goods, as like construction contracts, long-term contracts, and fertilizing. Its reduction rate because sociable consideration. And we have another rate is 8%. 8% is a table tax. Actually, we are using 8% as a table tax. This tax is special for luxury goods as some kind of telecommunication. We have the supplier should add 8% first, including the 8% in the cost, and then applying the 14% on the total. The second rate, after 14%, we have also 15% and 13% on some kind of luxury car. Excise taxes, of course, it's a label on tobacco and alcohol product. Third point, after we are finishing the VAT rates in Egypt, we are talking about the transaction of B2C or B2B. Actually, on VAT in Egypt, we have exclusion of salary and public governmental services, financial loan, intra-combination group between the parent and subsidiaries, but just the financial loan, not the allocation of expenditure. Third, stock and derivative exchange, it's also exempted from VAT. Exemption, we have, as I mentioned earlier, we have 57 goods and services, fresh food, milk production, tea, sugar, coffee, education, health and medicine, financial services under the Central Bank of Egypt supervision, insurance company, mining products in raw material, flight and overseas ship services. So in details, we have a guideline for simplified vendor registration, including all the 57 goods and services in details. First point, the credits. Of course, the VAT concept, including collecting VAT and re-reduction the credit of input tax or already paid. So the credit is always applied to input as a standard rate in the ordinary course of business. So any direct and indirect expenses associated with the sales subject to standard rates are deductible in Egypt. So we are talking now about the standard rate, but in the special rate, reduction of VAT, so it's not deductible. Actually, in some cases, special cases, the place of supply and threshold in Egypt, of course, the place of jurisdiction, including any local or important transaction to a benefit of the local customers. If you are talking about the local transaction, it's all applied to jurisdiction of Egypt. And we will talk later about the place of supply for digital services in details. Threshold in Egypt, the standard rate of threshold for goods and services is 500,000 Egyptian pound. K is 1,000. Sorry about the not explaining the expression of K. 500K is 500,000 Egyptian pounds. But in a case of services and table goods and services, from the first day, from the day one, there is no threshold in these cases. You have to apply for VAT from the day one. Number 6, time of supply. Of course, we have a lot of applicable points for services and goods, but in general, goods in the case of goods, the area of date of the risk transfer, removable goods from the location of supplier to the location of the purchasing, issuing an invoice, payment on advance. But in services, we have 4 exceptions for continuing services. In this case, the invoice is the provide of time of supply. Because some services like transportation, like long-term construction, the payment on advances in these cases is not a proof of providing all the services. So for more details, we are including in this slide the website of Egyptian Tax Authority and the guideline of digital services. You can read in details about all these 6 points. And the mic now is Mr. Kishore in the next slide. Thank you, Mr. Kishore.
Thank you, Khaled. So, friends, very similar to the indirect tax landscape of Egypt, we have the indirect taxation landscape in India. So, India introduced GST system in the year 2017, and as we all know that India has a federal tax structure, which basically means that taxes in India are levied both at the central and the state level, and therefore India follows a dual GST regime, which is similar to the Canada GST model. So we have two GSTs. One is Central Goods and Services Tax, and second one is the State Goods and Services Tax, which is levied on every intra-state transaction. That is a transaction that takes place within a particular state. That transaction is subject to two components of GST. One is CGST and other one is SGST. Likewise, when a transaction takes place between one state and another state, which is popularly known as interstate transaction, or the import of goods into India, then a component of IGST is levied, which is Integrated Goods and Services Tax. Similar to Egypt VAT, we also have a multiple rate structures. We have five rate structure, which is 0%, which is for exempt categories of goods. Then we have 18%, which is the standard rate. We have concessional rates for 5 and 12%. And we also have a higher rate of 28%, which is applicable on demerit goods and the luxury items like motor vehicles. In addition to it, we have cess, which applies to motor vehicle and select categories of tobacco products. Then we have certain exclusions under GST. For instance, basic customs duty that is excluded from the GST net. Likewise, petroleum products, they are outside the GST net. We have alcohol that is outside the GST net, which basically means that these goods or services are subject to taxation as per the old regime. We have power, which is outside the GST net. We have stamp duty on immovable property, which is outside the GST net. Similar to Egypt VAT, we also have the similar credit mechanism. That is, credit is allowed for all the expenses that are incurred for business purposes in the course or furtherance of business, while there are certain exclusions which are attached to the credit. And we are not getting into those details because the focus today is on Egypt VAT. Then, for determination of taxability, there are two important components which are to be followed for GST in India. One is determination of place of supply. That is, where is the place of supply? That is, where is the jurisdiction for those goods and services who is liable to deduct the tax. And then we have a time of supply. Likewise, Egypt VAT, we also have a different time of supply for goods as well as for services. For goods, it is earlier of the date of removal or invoice or the payment. For services, it is earlier of the date of invoicing or payment. So a structure more or less similar to the structure that is there in Egypt. With this, we come to the next section, which is digital services. Let's look at, friends, what does it cover and what does it excludes. Over to you, Khalid.
Thank you, Mr. Kishore. Uh, we will talk now about overview of cross-border digital services. In Egypt, we are starting in 2021 when we producing a project of law number 3, which issued in 2021. In this law, we are just following the international practice for digital services transaction, and we will talk about all the important points in this field. We will start on the scope of main digital services. Of course, after COVID-19 pandemic, digital services has a boom in this industry, especially for streaming services. People are now just prefer to watch the movies in their home instead of going to the cinema as a traditional behavior before COVID pandemic. And of course, now to getting a software and online license, it's very easy with the internet, website design and its tools. For the professional services as a legal accounting consultancy, it's also now it's very easy through the internet. So the main digital services, including a lot of kind of services. We will talk about it in details later. Now, the place of services, it's for VAT, it's not complicated as income and corporate tax, but any Egyptian taxpayer, any business, any non-governmental, non-profit organization, any governmental body, any permanent resident in Egypt, if your customer is one of these type of taxpayers or end customer, So the place of obligation of your services is Egypt. Third point is a VAT on B2C and B2B. The main course for B2C, you have to read your threshold according to your provided services, and you have to register under simplified vendor registration, and you have to apply to the periodic obligations in Egypt. In the transaction of B2B, actually, the burden of VAT in this case is the local business of or the local registered customer in Egypt. He is obligated to self-accounting on the reverse charge mechanism, but the non-registered supplier have to verify and uh, under the API system. API system is a system set to verify the local business in Egypt, TRN, tax registration number, and also the UID. UID or UIN is a unique identification number, uh, which uh, which provide the customer in Egypt. It's first, it's registered in Egyptian Tax Authority. Second, the person who deal with this tax registered number is the real owner of this number, to avoid the fake invoices and to avoid the people who just provide a fake number to avoid the applying of VAT. Number four, the compliance and obligations in brief words, the registration and obtaining the tax registration number in Egypt, and invoicing to end customer, end user, and in case of B2B, as I just mentioned, you have to register under API system to validate and verification the local business tax registration number and unique identification number. The tax period in Egypt is monthly return, and the country use is the same as the revenue collection. If you collected your revenue in US dollar, so you have to pay in US dollar. If you collected your revenue for uh, euros, so you have to remit your tax return in the same currency. If you have a lot of currencies, you have collecting in US dollar and euro and as an example, Great Britain pound. So in this case, you have to follow your financial reporting currency to simplifying the audit process in case you are under audit risk. You have to take care about taxable amount and the VAT rate, because as we mentioned before, we have two main rates in this cross-border digital services. The standard rate is 14%, but in the cases of professional services actually it's complicated because it's including an exemption services as providing educational services through internet. And if you are providing medical advising through internet, it's exempted for VAT. But the other what we can call it a professional services like freelancer as a type of engineering, designation, legal advising, issuing a professional license. In these cases, the VAT rate in this case is 10%. So next slide with Mr. Kishore. Thank you. Oh, it's mine. Sorry. And now the scope of VAT in Egypt. First, if you are non-resident vendor and you are renders digital services, if the recipient in Egypt, and we will talk about the terms of recipient in Egypt later, the VAT should be paid in Egypt. Uh, so we have two kind of recipient in this case. Non-registered person having the permanent resident in Egypt, and we have three factors in this case. And the other side, the B2B transaction, as we talked before, the governmental body is B2B in Egypt, public or economical authority, other authorities, and or non-registered entity in Egypt. So in these cases, you have to register in Egypt and issue your invoice with VAT to the resident non-registered. And in case of B2B, in this case, you have to validate that you are in provided by resident customer or resident taxpayer, and of course make sure for the UIN is compliance with TRN for the local customer. So next slide, please. The main category of the services we can talk about is the remote service in detail. The remote services is provided with no physical substance as advertising on the internet, providing cloud services, domain name, email tools, provision of content as ebook, music, image, video, software, and other intangible, providing data like newspaper subscription, forex trade, and the like, online supplier of digital content, as we talked about, movies, television show, online gaming, of course, and online gaming, including a lot of points to talk about, but not now. On the spot of services, like booking a hotel in Egypt. The services in this case, including two sides of services. First, the booking services from any site, and second, the local or on-the-spot services in the hotel. Fifth services, physical entry to tournament on sporting event, booking a table in restaurant or catering, rental car, passenger transportation services, or as they named as the smart transportation. And we have a lot of brands who are worldwide working in Egypt and also in India, I think. Next slide, I think, is Mr. Kishore. Thank you.
Okay. So, from an Indian GST standpoint, digital services are popularly known as online information and database access or retrieval services. That is OIDAR services. Now, what does it mean? It means services whose delivery is mediated by information technology over the internet or on electronic network. It typically includes those services whose nature of the services are such that their supply becomes impossible in the absence of information technology. So there has to be a minimal human intervention. The delivery has to be done through an information technology over the internet or electronic medium, and the nature of services should be such that their supply is impossible in the absence of information technology. So that is the basic definition of online information and database access and retrieval services, which is given under the Indian GST law. Now, the definition gives a illustrative list of services to be covered under OIDR. Now, the first category is advertisement on internet. Now, this typically includes social networking sites like Facebook, Twitter, Instagram. So, those category of services would fall under this category. Then we have cloud services like Amazon, or Google Clouds. So those kind of services are also qualifies to be a OIDR services. Then we have ebooks, movies, musics through the telecommunication network or internet. We all know that we have been using like Kindles, Audibles, Spotify. All these will fall under the OIDR category. Then we have database access or retrieval in the electronic form. Here we have categories like matrimony sites, shadi.com or matrimony.com. So all those category of services also falls in the category of OIDR services. Then we have online supplies of digital content. For example, Netflix, Prime Videos. Then we have digital data storage like your Google Drives, Dropbox. All those services would fall under the digital data storage, which is again a category of OIDER services. Then we have online gaming, except online money gaming. So this would include like Playstones, Nintendo kind of a games, which would fall under the category of OIDER services. Now, then we come to the next section, which is taxability of cross-border digital services. Over to you, Mr. Khaled.
Okay, thank you. We are now talking about taxation of cross-border digital services in Egypt perspective. Actually, in Egypt, the VAT on digital services applied in 2022 by the law number 3 and the regulation number 24 for 2023. And we started to applying the VAT on digital services in June 2023. And we are dividing the transaction between B2B and B2C, and each category have its own treatment. Now, if you are providing a services for B2C or B2B, B2C and B2B in the right site, the registration required for the non-resident registrant and for the obligation for VAT invoicing, we have now a distance between two transactions. If the transaction is to the end customer in this case, we are defining it. It's not a taxpayer in Egypt. And after we are validating and verifying the tax registration number and UID or UIN, if the result is not true, the TRN is not valid, and UID is not matching with the TRN. In this case, the invoice was issued as B2C treatment. In this case, we are invoicing the amount of services plus the VAT percentage and VAT amount, of course. And we are obligated filing the monthly VAT return. In the case of B2B, as we mentioned before, we are invoicing the services amount without applying VAT, because in this case, the resident registrant and or the local taxpayer have to self-account his tax, his VAT, and applying the reverse charge mechanism. Of course, the B2B transaction will apply after verification of TRN and UIN under API system. In the other side, if we are dealing with B2B, until now, it's not registration requirement, but if you want to make sure you are dealing with taxpayers in Egypt, you have to applying for API system to replicate the tax registration number and unique identification number to issuing your invoice without the VAT. And as we said, the local customer, the local taxpayer, have to filing its VAT return or paying the VAT under form number AAA if it's not VAT registered. We are talking about the VAT on digital services and the reverse charge mechanism. In the reverse charge mechanism, we can talk about non-VAT registered in Egypt. In this case, it's a payment form only. But if the VAT is registered, applying the reverse charge mechanism, if the service is in standard price, in standard rate, and it's applying to be deductible under credit system in Egypt, in this case, he will not paying anything. The tax, the VAT tax will appear in the both sides of the VAT return, and the result in zero Egyptian pound to pay. I think the next slide we were talking about the next, of course. Next slide is with Mr. Kishore. Thank you, Mr. Kishore. It's you.
Yeah. So very similar to Egypt VAT, we have taxation of cross-border digital services under the Indian GST laws. So we also have the transactions to be classified into B2B and B2C. What happens is if a digital service provider is located outside India and the recipient of the digital service provider is in India and the recipient is registered under the Indian GST laws, then that transaction would qualify as a B2B transaction. In that case, it will be taxable in the hands of the recipient. And that mechanism is known as a reverse charge mechanism, wherein the recipient of such digital services is liable to discharge GST under the reverse charge mechanism. Likewise, if it is a B2C transaction, there is a service provider who is located outside India. There is a recipient who is in India, and then that recipient is not registered under the GST laws of India. That may be for various reasons, maybe like he may be a government authority, it may be an individual who is procuring the services other than for the purposes of his business. So he qualifies to be a non registered recipient of those services in India, and that transaction is a B2C transaction, in which case the supplier of the digital services is necessarily required to take registration under the GST law and discharge GST under the forward charge mechanism. Now, friends, with this, we have another category wherein there could be an intermediary who is situated outside India. There is a facilitator of a transaction. For instance, there is a supplier of a digital services who is outside India. There is an intermediary, and this intermediary could be like an aggregator of services, like Google Play Store. That intermediary is situated outside India. There is a recipient of digital services who is in India, and that recipient is a category of non registered recipient. So the transaction is a B2C transaction, in which case the intermediary of the services will be deemed as if that intermediary is receiving the digital services from the supplier and in turn providing these digital services to the customers in India. And in that case, this intermediary is under an obligation to take registration under the Indian GST laws and discharge GST under the forward charge mechanism. Now, friends, there are certain exceptions in which case this intermediary is not liable to take registration. This intermediary is not liable to discharge GST under the forward charge. Instead, the supplier of digital services is required to take a registration and discharge GST under a forward charge mechanism. These exceptions are that wherein this intermediary is raising its invoice, which clearly mentions the services from the digital service provider and services from the intermediary. That is, the category of services are clearly demarcated in the invoice which is issued by the intermediary. This intermediary is not responsible for collection or processing of payments. This intermediary is not the person who is authorizing the delivery of services. The terms and conditions of the digital services are decided by the supplier of the digital services and not by the intermediary. That is wherein this intermediary is pure play, a facilitator of services and not taking the services and in turn supplying the services. In this case, the intermediary is not under an obligation to take registration in India. Rather, the supplier of digital services is under an obligation to take registration under the Indian GST laws and do the compliances. With this, friends, we now come to our next section, which is determination for the rate of tax and place of supply for digital services. Over to you, Khalid.
Okay, thank you. Actually, as I mentioned before, we have in Egypt standard rate of VAT is 14%, and the 14% is as a general standard rate. Uh, we can apply it of some kind of digital services. And in the other hand, we have 10% reducted rate on professional services, and we have exemption of VAT. As we mentioned before, we can talk about as a standard rate of VAT 40%. The provider of the services should apply the 14% in his invoicing to B2C, in this casing, in advertising on the internet. It's 40%, providing cloud services, domain name, email tools, provision of content, software and other intangible and other related services, license and maintenance. Subscriptions is also applied under 14%. Providing data information, forex trade, online suppliers of digital content, and as a movies and television show and etc. Online gaming, of course, the subscription on and in-the-app purchase is applied under 14%. And we have reduction rate of 10%, 10% on the professional services. Professional services, as we talked before, legal, accounting, law cases, consultancy, professional certificate services, freelancers services are liable to a rate of 10%. But in freelancers, we can separate general services, but in case in designing, providing advice, the professional worker are obliged to are liable to applying VAT as a reduced rate at 10%. But in freelancers, we have two exemption of VAT as educational and training services. It's exempted from VAT. Medical consultancy, it's exempted of VAT, but under certain conditions. If we are, as an example, providing a software and the contract of providing this software, including a training course. In this case, the training course is not exempted from VAT. It's a part of providing a whole contract of the software. The software in this case is 14%. So the 14% was applied on the whole terms of condition of this conference, this contract on this services. It's a special case, but we are explaining all these services in the simplified vendor registration guideline on Egyptian eta.gov.eg website. So it's yours now, Mr. Kishore.
Sure, Khalid. So very similar to Egypt VAT, in India also, the rate of tax depends upon the category of services. We have a standard rate of 18%, which typically applies to almost all the services. But then there are certain category of services which are under the reduced rate. For example, ebooks. Ebooks are taxable at the rate of 5%. So for such kind of a services, a reduced rate would apply. Another important consideration is to decide the place of supply. That is, what is the taxing jurisdiction? If the place of supply happens to be in India, only then those services are liable to be taxed. Now we have a place of supply rules under Indian GST laws. For OIDR services, the place of supply has been specified as the location of the recipient of services. Now, very interestingly, friends, there is a question that how to decide that where is the recipient of those services are located. So for that, we have conditions which are contradictory conditions. There are about 7 to 8 conditions, and two of these non-contradictory conditions are to be fulfilled to decide whether a person is a resident in India or not. For example, if the location of the address which is presented by the recipient through an internet, if that is in India, or the credit card or a debit card or any other card by which the recipient settles the payment, that is issued from India, the billing address of the recipient is in India, the IP address of the device which is used by the recipient to receive the services is in India, the bank of the recipient in which through which the payment gets settled is in India. The country code of the SIM card which is used is of India. The fixed landline through which the services are received, the location of that fixed landline is in India. So if two of these conditions get satisfied, happens to be in India, then it would be deemed that this recipient is located in India and the place of supply of these OIDR services happens to be in India. Now, friends, with this, we come to the next section, which is registration and the compliances. I would invite Sara to please take over the registration and the compliance section for the Egypt VAT perspective.
Hello, everyone. As Mr. Khaled mentioned to that non-resident vendor that providing digital service or remote service must register under the simplified registration regime. So I would like to mention to that there is the user guide for e-commerce is available on Egyptian Tax Authority website to assist non-resident vendor to complete their registration process. I will mention to the steps of registration process. A non-resident vendor must create an account on ETA portal and fill their personal information like as his trade name, his username and password and his email and phone number. After that, he will get an on-time password to verify his personal data. After that, he will select forms from his account on ETA portal and select the type of simplified registration form. After that, he will fill his he will fill the required data in the form like as the trade name and official name of platform and the website of platform. After that, he must check the registration form and submit his registration form. After he is submitting his registration form, Egyptian Tax Authority will review it and take action, and he will get and he will get his tax ID number via email or on his account portal, ETA account portal. The next slide. Invoicing requirement for non-resident if his transaction B2B or B2C, non-resident vendor must non-resident vendor who provide digital and remote service in Egypt, he is not required to register for the e-invoice system in order to facilitate tax produce for non-residents. This is considered a tax incentive to attract investment in the digital economy in Egypt. So he requires to get invoice, not e-invoice, invoice for B2C with VAT amount, and invoice for B2B without VAT amount or no VAT applying. So the resident taxpayer must comply reverse charge mechanism. API integration system. Non-resident vendor must verify the TRN and UIN for resident taxpayer in Egypt through providing service. The system of non-resident vendor should integrate with the ETA system through API to allow for the automated exchange of information between the non-resident taxpayer and the Egyptian tax authority. The benefits of the API system to avoid tax evasion and fake invoices and use the tax ID number for others. Next slide, please. I think next slide. Mr. Kishore. No. Oh. The obligation for a non-resident vendor, he must submit his VAT return monthly, required data in the VAT return, trade name of the platform, tax ID number, tax period, currency of VAT amount, and sales amount and VAT amount. And after that, he must include the bank transfer SWIFT document in the attached icon to verify the payment of VAT amount. After that, he must check and submit his simplified VAT return. That is just the next slide, Mr. Kishore.
Thanks, Sara. Thank you very much. So, we have the simplified registration requirements in Egypt. We have a simplified registration requirement under Indian GST laws. So, under the Indian GST laws, an overseas digital service provider, when they are providing services on a B2C basis, that is to a customer in India who is not registered under the Indian GST laws, the supplier is liable to take a registration, and that registration is mandatory irrespective of the threshold turnover of these, which is given under the GST laws. The registration is to be obtained within a period of 30 days for becoming a liable, and the process is fairly simple. There is a simplified registration scheme wherein the supplier is required to file a form online which is known as REG10 form and take the registration. Now, this registration is to be taken either in the name of the overseas supplier of the services, or if the supplier does not have a place of business in India, then the overseas supplier can appoint a person in the taxable territory, which is in India, for the purposes of taking the registration and doing the periodical compliances like filing of returns or payment of taxes. Then that representative should take a registration as a representative of the supplier of the digital services. We have a simplified return for the overseas digital service provider. The form is GSTR 5A. This return needs to be filed by 20th of the month succeeding the relevant calendar month. Also, as we know that for other service providers or supplier of goods, there is a requirement to file annual return. There is a requirement to file annual reconciliation statement in Form 99C. These requirements has been dispensed of for the supplier, overseas supplier of digital services. That means the overseas supplier of digital services is not under an obligation to file any annual return. Neither he is under an obligation to file annual reconciliation statement under form GSTR 9C. The only requirement for him is to file a monthly return which is in form GSTR 5A. Also, the invoicing requirement specifies that the supplier is required to issue a tax invoice containing all the requisite details which are given under the GST laws. Also, the tax invoice should include the recipient state of the recipient, which would be considered as an official address of the recipient so as to decide the place of supply of services. As we know that India has a federal tax structure, so we need to know the jurisdiction which is responsible for collecting the taxes in India. So it is important that the supplier is required to mention the recipient state so that the relevant jurisdiction is under an obligation to collect that tax. So, friends, with this, we come to the last section of our presentation, which is the penal consequences for non compliances. Over to you, Sara.
Penalties, according to VAT law number 67 for 2016, there is many penalties. So, if the taxpayer late transfer to VAT amount to Egyptian tax authority, the penalty will be 1.5% additional tax on the taxpayer per month or part of months. If he file his VAT return late, Egyptian tax authority is entitled to impose a penalty between 3,000 Egyptian and 50,000 Egyptian. If he doesn't submit his VAT return within 60 days of the due date, the Egyptian tax authority will charge a penalty between 50,000 Egyptian pound and 2 million Egyptian pound will be imposed. According to tax evasion, penalty of 5,000 Egyptian pound to 50,000 Egyptian pound, or imprisonment between 3 and 5 years. Double is recommended within 3 years. He is not report his invoice in time, penalty between 20,000 Egyptian pound and 100,000 Egyptian pound. If a non-resident vendor providing digital service in Egypt not registered under the simplified registration regime, Egyptian tax authority may ban access to Egyptian market until registration is obtained. Also, when Egyptian tax law are not complied, ETA or Egyptian tax authority will contact the responsible person, and if they don't respond, Egyptian tax authority may commence a risk review or audit. A risk review may result in register the non-resident vendor for Egyptian VAT and sending an assessment of liability based on Egyptian tax calculation with additional penalties, or register the non-resident in the court in the responsible person country. The next slide, Mr. Kishore.
Thank you, Sara. So, similar to the Egypt VAT laws, we have penal consequences for non-compliances under the Indian GST laws. For instance, if the supplier of the digital services fails to obtain the registration, then the penalty is 20,000 INR or the amount equivalent to the tax evaded, whichever is higher. Likewise, in case if there is a failure for payment of tax, the penalty is higher of 20,000 rupees or amount of tax evaded. In case the supplier obtains a registration but fails to file their monthly return, then there is a penalty of 200 rupees per day of default, subject to a maximum of 10,000 rupees under the CGST and the SGST laws. Also, if there is a delay in payment of taxes, there is an interest that is going to be charged at the rate of 18% per annum for the period in default. So these are all the penal consequences which are given under the Indian GST laws, which are quite similar to the penal consequences which are there under the Egypt VAT laws. Friends, with this, we come to an end of our session, and I would invite people to come forward and ask any questions that they may have regarding Egypt VAT laws, especially for digital services, because this has recently been introduced in Egypt and the laws are evolving, and the challenges for the overseas suppliers are also equally becoming a challenge for them. Thank you. Over to you, Taxman team.
Okay. I have a question. Mr. Khaled, is Egypt apply only VAT on digital services or apply income tax cross-border services or transaction? If you could also sum up the reverse charge mechanism. Okay. Actually, in Egypt, we are following our OECD model, and we are not applying income or corporate tax on cross-border services. In Egypt, we have a local article in income tax law in Egypt, which include withholding tax on the imported services. Actually, in B2B transaction, but in B2C transaction, we are waiting a final agreement between the countries which already signed it on PIPS action. So I think in the field of income tax or corporate tax on cross-border services, it's very complicated to make a decision now. It's a global complex in this field. But if the other part of the question, if you could also sum up the reverse charge mechanism, okay. The reverse charge mechanism, it's VAT treatment. It's not about income tax. It's just for VAT treatment or consumption tax. When the local resident taxpayer when the local taxpayer importing any services from outside. Of course, it doesn't have a physical substance. So in this case, the local taxpayer are obligated to self-account its services amount first and apply the VAT rules. If the VAT the VAT rate is 14%, so he should filing the application with the 14% amount. If it's 10%, so it's a 10% amount. But in case of 14%, we have two treatment in this case. First one, if the local taxpayer is registered in VAT. In this case, he will apply for two treatment. First one, to pay the 14% amount of VAT, and second one, in the same VAT return, he will deduct the same amount if it's related to his final output. So in this case, the principle will apply in this transaction. But in case it's income tax registered and not registered in VAT system, in this case he will pay just pay the VAT amount in the form of the form Number triple A, triple one, sorry. The reserve charge mechanism, in brief words, it's P2P transaction, local tax buyer. If he is registered under VAT system, he will apply credit. If it's possible. If he didn't, if he doesn't registered under VAT system, he will just pay the VAT amount instead of the supplier of these services. It could possible to share both for this insightful webinar. It's not for me. Thanks for you. Thank you. Okay. I think the webinar will share it on Taxmann
Yeah,
website.
I think that's all the questions that we have. In case if there are any questions, please write to us. We'll get the answers from Khaled and Sara.